Hi, I'm Eric Schneever, shareholder at Clark Schaefer Hackett and chair of the A&A Technical Subcommittee.
And I'm Jared Pranger, a senior at Clark Schaefer Hackett.
The FASB's new accounting standards on revenue recognition, which are codified as Topic 606, introduce a 5-step model that all companies must use when recognizing revenue. At the heart of the new standard, the FASB has introduced a 5-step model companies will use to recognize revenue. Number 1, identify the contract with a customer. Number 2, identify the performance obligations in the contract. Number 3, determine the transaction price. Number 4, allocate the transaction price to the performance obligations in the contract. And lastly, number 5, recognize revenue when or as the entity satisfies the performance obligation. In this video, we're going to walk through Step 1 of Topic 606, identify the contract with the customer, walk through some highlights, and share some examples.
First, Topic 606 defines a contract as an agreement between two or more parties which creates enforceable rights and obligations. But what does that really mean? The FASB guidance in Topic 606 does go further and explicitly states the following criteria must be met for an agreement to meet the definition of an accounting contract. A. The parties to the contract have approved the contract and are committed to perform their respective obligations. B. The entity can identify each party's rights regarding the goods and services to be transferred. C. The entity can identify the payment terms for the goods and services to be transferred. D. The contract has commercial substance. And lastly, we have E, which is, it is probable that the entity will collect substantially all the consideration to which it will be entitled in exchange for the goods and services that will be transferred to the customer.
We are going to refer to these criteria over the next few minutes, but for now, let's walk through some examples. I'll ask Jared to share some scenarios, and then I'll walk through my thought process in applying the guidance of Topic 606.
All right, in our first example, let's assume Eric is a manufacturing company and I'm a customer. I want to buy 1,000 actuators from Eric. His sales associate has quoted me at a price of $50 each. I complete a purchase order and send it to Eric's sales department. Is this a contract?
Based on the fact pattern you've provided, I would conclude that this is not a contract. Although you have communicated your intention to purchase from me, your purchase order alone does not indicate that I have actually approved the agreement, and therefore I'm technically under no obligation to perform.
Okay, well let me ask you this. What would need to be done to make this a contract?
Jared, having received your purchase order, I could simply send back some sort of a written communication, say for instance an email or a sales order confirmation, that would indicate that I actually accept your order. Now, I do think it's important to note, a sales confirmation can be done verbally too. In the example, you indicated that the purchase order form was sent to my sales department. If you had actually sent that purchase order to my sales associate, and he or she verbally accepted the order, articulated payment terms, etc., that too could actually meet the definition of a contract. Now, having said this, I would generally encourage all businesses to create a document trail that clearly articulates the 5 requirements we've discussed in this video. Verbal commitments can create challenges.
So a purchase order alone is not a contract?
Well, never say never, but a purchase order alone is usually a one-sided offer, and a one-sided offer does not meet the definition of a contract in Topic 606.
Okay, let's move on to our second example. Let's assume Eric is a manufacturing company and I'm a customer. I'm opening a restaurant and I want to buy 5 ovens from Eric. Eric and I have agreed on all the terms, rights, and obligations, and that the price is $500 each. While I have a passion for food, I've never owned a restaurant, and I've decided to open my restaurant in a very competitive area. Is this a contract?
This one is interesting. I see a situation where you have no restaurant experience, and further, you have chosen to open your restaurant in a very competitive area. While it seems the first 4 contract criteria have been met, I am not sure that I'm going to be able to collect substantially all of the consideration from this agreement. I'd have to conclude that this is not a contract.
What if I had agreed to give you $1,000 as an initial deposit?
I would again come to the same conclusion that this is not a contract. Even with the $1,000 payment, I'm still not sure that I'm going to collect substantially all of the consideration from this agreement.
Let's say you've been looking for a way to get into the restaurant industry, though. I represent your first and only opportunity to do that. As a result, you agree to sell me 5 ovens at $100 each versus the original $500 each. And that is definitely a price I can pay.
Well, you just threw a curveball. Although the stated price is $500 for each oven, we have agreed upon a price of $100 for each oven. And since I feel comfortable that you can pay that amount of consideration, we probably do have a contract at this point. Recall, item E indicates the amount of consideration to which the entity will be entitled may be less than the price stated in the contract if the consideration is variable because the entity may offer the customer a price concession.
Truthfully, the concepts of Step 1 are not overly complicated. You just have to make sure that all your agreements meet the requirements established that we previously discussed in this video. To do so, I would encourage you to develop an internal control and/or designate an individual that's responsible for reviewing your agreements. I hope you found this information useful. Please check back from time to time as we add additional content.
Thanks for watching.